when BlackRock and Vanguard and everybody's getting involved, we're not going back under 70K Bitcoin in a theory, right? So why didn't retail jump on the train then?
We're starting to hear echoes that there might be regulation coming. There's a very good chance our agency's going to be knocking on your door in the next 18, 24 months, and all your records are going to get pulled, etc., etc. We would recommend that you start making adjustments.
He ends it, that's good for Russia because they'll stop dying. Russia will take the territory that they want. He'll draw a new line, and then that'll bring back the Russian stock market. That's basically what you're thinking.
Your orders are going to a broker, which is almost like a betting house, and they're logging your bet, if you like.
It sounds like sim trading with the prop firms, kind of, right? Like it's simulated market environment. You're trading the same price, but the orders are never going to the real market.
You know, if I keep on this career trajectory in 10 years, I'll be wealthy. And they'll arrive at 40 years old, what I arrived at 20. And they start to realize, oh my goodness, this is fulfilling. I need a family. And guess what? We're too old. You know, the past birthing age, all the rest of it.
What's up, traders? Welcome back to the Day Trading Show. I'm your host, Austin Silver. Today, I've got Sam KB in the house for part 3. Sam and I have developed a great relationship over the years. I love everything Sam has to say. We talk about prop firms. We talk about AI. We talk about the trade of 2025. We talk a lot about digital assets and crypto. Sam is just a wealth of knowledge. He really is. He's one of my favorite guests. I'm not just saying that. So I know you guys are going to love this. Please make sure you check out his links in the description. Go follow him on YouTube. Please also check out our links to our sponsors. They are the reason this show is possible. So thank you to them. And now enjoy my conversation with the man himself, Mr. Sam Kavanaugh. Saves you a fuck ton of money, bro. This episode wouldn't be possible without Top One Trader. They have a brand new instant funding model that I think everyone needs to try. There's 5 different accounts you can choose from. You can hold trades over the weekend, and there's a 90-10 profit split. So use my link in the description. Use the code ASFX to save on your next instant funded challenge. And as always, thank you to Top One for being a sponsor of the podcast. Now let's get into the episode. Traders, what's up, everybody? Welcome back. We've got a good podcast today. Sam, this is our 3rd one together, I think, right? This is the 3rd we've done.
Probably.
Dude, I appreciate you doing this, buddy. I think you might be the first three-peat, like Lil Wayne out here, bro. Like, good for you. 3rd time on the podcast. It's good to have you back. Dad life in the building, moving house, a lot of things to catch up on. So for those of you that don't know Sam and I have been connected. I think we originally met on Twitter, Sam, because we both at the time were trading Forex. I was still heavily involved in Forex, and we shared similar beliefs about all of the prop firms. And like you and I both kind of pushed the same message, but in a different way. And then we ended up just kind of clicking and coming together. But let me just do an intro on you really quick, if you can. Tell everybody how long you've been trading, where you're at, why you trade Forex. Give them like a high-level overview of you, and then we'll get into all the other fun stuff.
My goodness, I think the hardest question is going to be why.
I know.
But so I'm Sam. I've been involved in the markets since about 2015. I've had a pretty turbulent journey, as I'm sure any professional trader will tell you. Had some crazy ups, had some crazy downs as well. Been involved on the more professional side probably for about 4 or 5 years, run a couple of trading floors, worked in person with a team, trying to build a team. Also do a little bit of lecturing in universities, speaking at financial expos, conferences, that type of thing. Now run a medium-sized education company and trade FX, also heavily invested in digital assets as well. So that pretty much gives the full synopsis, I think. But why I trade? You know, it would be nice to say because trading is just the best career in the world. I mean, I think it is. But I trade for the same reason anyone who makes money from trading trades, to make money.
100%. Your most recent call that I can think of that was really good on X, I mean, you have many good calls. You nailed that Ripple short. I believe it was like a year or something ago. Crushed it, bro. You were the first one to call that. Crushed it. But now, since then, we've gone into like a bull run. So maybe let's start with digital assets and crypto. What's your take? I mean, 97,000 as of right now. on Bitcoin. Top is 108. Is the bull cycle over, or what's your view on everything from here?
I don't think we're even close to the top of the market. I think in terms of a local top, around the end of tax season in the US, usually you'll get a local top there. But in a heavily trending bull market, things like tax season and all that shouldn't really be that much of an issue. It should just be a hiccup. I think people are looking at 2021 as their like base case model for what this cycle will be like. And I did think for the longest time, and I mean up until maybe a month ago, I thought that that was the base case. I thought, you know what, 2013 run, and then there's a 2017, then there was a 2021, and it's just getting smaller and smaller. But there was a lot of macro factors in play around 2021 that aren't in play just now. And there were a lot of macro factors in 2016, 2017 in play that are in play now. Trump getting in, the desire for a weaker dollar, the desire for more liquidity, all these things are going to play a factor. And when we look at global liquidity index, when we look at M2, monetary supply and stuff like that, what's evident to me is that things really haven't even started going yet. You look at, I don't know, business cycle indicators, all the rest of it. All these metrics that should be going up aggressively in a bull run aren't yet going up aggressively. And so I think we've seen crazy Bitcoin dominance. I'll be honest, it's probably a controversial take. I think the majority of that is not retail investors. I think it's big money has been driving this cycle so far. And I think as we get into next year and money supply starts to go up, global liquidity starts to go up, business cycle starts to tick up, I think what we're going to see is we're going to see retail really enter the market, and we're going to see the fireworks.
That's very well said. Why do you think the retail hasn't gotten excited about it already? What has kept that suppressed? Because if you look at it from a your institutional mind looks at it, wouldn't you have thought when the ETFs were formed, it's over. That's the base. We're now never going to break underneath that price. When BlackRock and Vanguard and everybody's getting involved, we're not going back under 70K Bitcoin in a theory, right? So why didn't retail jump on the train then?
It's a good question. I mean, there's a lot of different narratives at play this time.
Sure.
We began to see things like meme coins, etc., really tick up this time round, and that does pull some retail liquidity. Let's be honest. It'd be nice to say, well, it's a drop in the ocean or whatever. That does pull retail liquidity, and you have your whole TikTok generation that are really plugged into the memes and are seeing them on TikTok, seeing them on these sort of faster paced social media, making their entrance into crypto with stuff like meme coins. I think in the past, what we've seen is we see people getting into crypto either because of Bitcoin, and then they start to see all the things below it. They see things like Ethereum, Solana, etc., and the money starts to trickle down. Or people get into crypto because someone's told them about like this amazing altcoin. Have you heard of XRP? And they get in and they become an XRP maxi, and then they realize, oh my goodness, there's so much more.
Right.
This is sort of flipped on its head. So rather than, if you imagine it like the pyramid's always going to be a controversial thing to bring up in a business podcast, but if you imagine it like the pyramid and you have Bitcoin at the top and all the things smaller, alts and all the rest of it all the way down. So it would usually happen like that. People start at the top, money trickles down, or people come in somewhere in the middle and they see what's below it. What has happened this time, I feel, and again, I don't think this is like broad scale. I think there's a lot of retail haven't even really looked at crypto again yet, but they're sort of coming in at the bottom into the meme coins. Now, why does money tend to trickle down? Well, people get in because of Bitcoin or XRP or something, and it doesn't move a whole lot compared to some of the alts doing 100x. They're looking for that better opportunity, and so they start allocating down the way. I think this time around, what's kind of happened is people have come in at the bottom into these, absolute trash meme coins.
Fart coin.
What's going to happen is 9 times out of 10, they're going to get burned. And then they start hearing about these safer things above it. And so the money actually starts trickling up the way rather than down. Now, that's just a thesis. It's not You
That
know,
makes a lot of sense, bro. That
yeah,
does, because it does solve both. It shows us, or it makes sense of what we are seeing. And like you remember, even in 2017, everybody on that bull run, at the end of it, everyone was talking about Bitcoin. Uber
yes,
drivers
yeah,
telling you to buy it,
yeah,
everything. This time it's been so different. But
yeah,
why makes sense, because the narrative of how to get into crypto is changed, right? And now even look at
100%.
Solana, right? It was Ethereum before, it was NFTs
Mm,
before. Now it's meme
yeah,
coins on the Solana network. So even the network itself has changed. Now, how do you, as a dad, you're becoming a dad now, so we're getting older. How do you
yeah,
stay up on everything that's going on? Because where I'm finding is like, just as I felt like I started getting an understanding during the NFT bubble boom, whatever you would call it, and then the gas fees, just as I started to learn about that, it started to die and went to nothing and all
yeah,
these NFTs. Now you have to learn about Solana and this and that. What would be a resource for the listeners of like, hey man, follow this or read these books or
yeah,
read you know what I'm saying? Real quick, before we go any further with today's podcast, I want to thank our second sponsor, Edgeful. Edgeful is the only tool you need to reach your trading goals. This is the one-stop shop if you're trading stocks, futures, or crypto. You can go into Edgeful and gather all the information you need to refine your edge. Whether it's the report on how often the gap fills or the report on how often we make a new high of day in Power Hour, all of those answers are given to you and updated daily in Edgeful. So use the link down below, check out Edgeful. This could be a tool that changes 2025 for you. So I'm being serious. This is definitely worth your time. And if you want to see us use it, come check out ASFX TV. But I got an Edgeful link in the description. Definitely go check that out. And of course, thank you to them for being a sponsor. Now let's get back to the video.
yeah. So one last comment on this kind of thesis
Sure.
that I have.
Yeah.
I want to draw a comparison to something that will be familiar to
Okay.
both, yourself and myself, but also to a lot of the listeners.
Okay.
How many of you guys got into trading finance through a free signals group or something like that? That is almost the equivalent of starting at the bottom. Very, very minimal money to put down, extremely high, returns, very, very shady, dark market. And many of you, or if you're watching this, not many of you, but many people, after they get burned, they make their exodus, they're gone. But a lot of people, like many of yourselves, you start moving up that triangle, if you like. You start moving up to the more reputable companies, the ones that are slightly more expensive that you probably would have overlooked in the past.
Yeah.
And so I think the same thing happens. People get in with meme coins, very shady, very dodgy, and some of them leave and never return. But some of them start looking for the more reputable thing to think, okay, I'm going to have to put a bit more money in. This is likely to work. Now,
Great example. Yeah.
to get on to kind of keeping your finger on the pulse with things, like, our objective needs to be not to catch every move, not to catch every play, not to catch every upcoming thing. I think the fact that we're in finance in general, that we're on Twitter and all the rest of it, you have a better chance of having your finger on the pulse than 99.9% of people out there.
Yeah.
If something interesting is going to happen, the problem is not that you're not going to hear about it, but rather that you're not going to have the conviction to pull the trigger. Because you name it, whatever NFT, whether it's CryptoPunks or whatever Solana meme coin, dog with hat or whatever, all of these things, we've all seen it come across our timeline, but we don't have the conviction to pull the trigger when it happens. And it's only when it's done 7,000% or, 7,000,000%, whatever the case may be, that you're like, oh my goodness, I saw that, I knew about it. And so I wouldn't be overly worried about what if I miss, what if I don't see the next opportunity. You will see it. The chances are you just won't have the conviction to pull the trigger on it. And like anything in the digital asset space or in this constantly evolving world of technology and finance, it comes down to being in the right place at the right time and making the right move at the right time. And there is no exact science to that. There is an element of randomness, luck, chance that comes into that.
Do you think that it's one of those situations too where it's like, I don't need to know why fart coin is moving, but if
Yeah,
I understand the bigger picture of like meme coins being
yeah.
attractive to capital, then you can take advantage. So do you believe in that? That like, I don't need to know everything about something, a market, for example, to make money in that market?
Yeah, yeah. I mean, of course. And I think this kind of touches on people want to know the minutiae of how things work. I don't
Of course.
really care. This is where we get into the whole all these theories about what controls the financial markets and all the rest of it. When it comes down to it, we can sit and argue about whether they are splat or not, till the cows come home. Is it going to make a tangible difference to your day-to-day life, how you operate? No. You're not going to be like, oh my goodness, I've just realized that the theory of gravity is made up, like some of these people claim. And you go outside and you start walking differently or you start floating around. Like, it doesn't change. What you have is you've been dropped into this world at a time you didn't choose, by people you didn't choose, in an area you didn't choose. This is the way things are. How you act based on the information you have is going to determine whether you're successful or not. So understanding exactly how a market works or whatever, I used to be like that because I come from a very traditional finance sort of mindset. And I remember doing a university lecture in 2021, maybe 2020. And up until this point, I'd been totally against cryptocurrency. I thought made up money, load of nonsense. It's had its bull run, that's it. And I came to the point where I realized, okay, we're trading in the markets and we're doing X% per year. Some of these guys are coming in and they're making money on dog coins and all the rest of it, and they're making thousands of percent. If you can't beat them, join them. You don't need to understand it. What you do need to be able to do as a trader is understand when you have a good risk reward opportunity and understand that the probability, if you have a 20 to 1, return to risk, or a 50 to 1 return to risk sitting in front of you, the probability doesn't need to be 60%, 70%, 80%. Probability can be 10%. Probability can be 20%. And so whenever people ask me, how confident are you in, even pick one of the big coins, Solana, something like that, I say, about 30%. And they're like, oh my goodness. And I'm like, I'm just being straight with you. Something crazy could happen tomorrow that none of us could have ever foreseen, and it could go to zero. I have 30% confidence that's not going to happen. But what I do see is a great risk reward opportunity. And so the bottom line for me is, if the risk reward is good enough, I'm going to put money behind it.
And some of the upside on some of these coins is ridiculous, right? I mean, you've
Of
seen
course.
it. You're buying them at a fraction of a penny, 0.00000 sometimes. It's ridiculous. And then they'll pop to $1. And you won't have any
Yeah.
reason why. There's big players behind the market, behind the scenes that are maybe moving the market, whatever it may be, but you can still ride on that. So do you think that digital assets are something that do you think that this is a new trader's advantage, or do you think this is something for seasoned people that understand risk reward like yourself? Because think about the new guys that are listening, maybe people trying to pass their first prop firm challenge. What if they're thinking, should I jump ship on Forex and futures and all that and just go to crypto? Would that make sense for them? I would say maybe not, but I'd be curious to say, what would your think? Because I don't know if people can handle that 30% probability. I think they would
Of
panic.
course. Of course. There's a couple of ways of looking at this. So finance experienced digitization in terms of hardware and market access in the early 2000s. So,
Sure.
Go back into the 80s, 90s, trading was done at, the CME or wherever, physical, boots on the ground, standing in the pit, executing trades.
Hand signals, screaming. Yep, the whole thing.
All the rest of it. And when point and click trading came about, all of a sudden you can get market access via computer terminal, all the rest of it. There was a digitization in finance, and those who didn't adapt, they ultimately died. You had guys who were extremely successful in the pits, couldn't get to grips with the technology, but that was digitization of hardware. What we're seeing is almost like it's playing catch up. If you imagine if we broke trading down into two sort of sectors, the hardware, the market access, the tools you're using, which was all physical, analog at one time, no pads and pens, all the rest of it. And on the other side, you have like the instruments themselves being traditional, whatever. We had like the actual hardware and market access becoming digitized, and the assets were still traditional. They were still what everybody had known for all this time.
Absolutely.
It's now like we live in the digital in terms of market access, and a lot of people are still messing around with the traditional stuff. I believe there will come a time where the actual assets that we're trading, the contracts, whatever it may be, are going to be fully digitized, and we are going to have a completely digital financial world. We're already pretty much there in many ways, but I do believe digital assets are just going to gain more and more prevalence. And so in 5 years, people getting into trading as retail traders are maybe the split now might be like, I don't know, 60% traditional and 40% digital. And that may flip on its head. We may see the majority of people coming into trading for opportunities in cryptocurrency. Now, to kind of look back around to your question, would I recommend, anybody just kind of wander into it? It depends. I would recommend your beginner wander into trading the euro dollar. If you have the research and you understand what you're doing and you take time to test things and to learn, then sure, anyone can take you by the hand who knows what they're doing and lead you to profitability in crypto the same way they can in traditional markets. The advantage we have in crypto is you don't need leverage. You just don't need it. I have 500 to 1 leverage on some of my accounts. I'm not using it all, but
Right.
I have 500 to 1 leverage on some of my accounts because we need it. You need leverage to make money in a currency that moves like in a 2% range for the year if you're lucky. Whereas you have some of these cryptocurrencies are moving in a 40, 50% range. If you're in a bull market, they're doing several hundreds of percent to the upside. You don't need leverage.
Yeah.
And
That's
so,
an attractive
yeah,
piece maybe to some people.
yeah, no leverage required. You can jump a few grand into an account and you're buying it spot. So even if we go into a bear market and you're down 80% on your position, you still hold the token. It could come good in a future bull run,
It's a good point. That's a really good point. Yeah, I think that people are intimidated by it. That's why I asked that question. Like they see some of this, they're like, this is so new to me. I'm just going to go
Yeah.
trade, whatever, the old school. But it's like, I think that's closed minded in a way. And I mean, look, everybody listening is going to agree with me. You just admitted I didn't like crypto and then I changed my mind. That characteristic, you probably would agree with me on this, is like the number one most important characteristic in finance is adaptability, aka just admitting when you don't know something or you were wrong and then adapt and change and be willing to
Yeah.
stay open-minded. Do you
Yeah.
think of any other important characteristics that maybe stand out over the last year in yourself that's kept you afloat, that's kept you trading well this year? As we kind of pivot away from digital assets, let's talk more about your trading, Forex trading. I
Yeah.
want to talk to you about the yen carry. I want to talk about some of that stuff that's happened this year. But talk to me
Yeah.
about like characteristics to survive 2024. When you think back to it, other than adaptability and being hard to kill, what else stands out to you?
Resilience. I mean, in traditional markets, I've had a pretty lackluster year. Now it's completely in line with my data, but when you're somebody who like last year, I think 80% of my income came from trading, whether that be on prop firms, my own money, all the rest of it.
Yeah,
Now this year, like 80% of my incomes come from crypto. So
that's
it's
crazy.
kind of flipped on its head. Now that's one because crypto's been doing really well,
Yeah,
but two because the mechanical systems that I use in FX and commodities had a pretty lackluster year, to be honest.
interesting.
Now, what's required to survive that is resilience. If you're looking at you're ending the month and you've got nothing to withdraw from a prop firm, 1 month fine, 2 months, 3 months, you start getting like, when's this payday going to come around? Being resilient, understanding what to expect from your system, and this is where testing really comes into play. But I think resilience has got to be one of the top traits that you need as a trader. People out there are going to tell you you're going to make money every month, every quarter, you're going to make money every year. As somebody who's been involved in the markets, it'll be 10 years next year. I can tell you in the past 10 years on my systems, there have been maybe 2.5 years that have made zero money. So, I mean, let's just extrapolate that and say maybe every 4 or 5 years you could have a down year.
Yeah,
If you're not prepared for it, if you don't have the mental that's needed to survive that, you're going to be done.
100%. Yeah. Why do you think it's been lackluster? That's probably what everybody's thinking now. It's like, what about the systems? When you say lackluster, Does that mean down, or does that just mean not as much up as you would like it to be? And why? Why do you think it's been? Because you would think Trump taking office, everything is bullish, all-time highs in US markets.
Yeah.
What do you think has been the lagger?
This is big, everybody. This has not happened before. And for being a listener of my content of the podcast, you're getting exclusive access to TradeZella's new 5-day free trial. Yes, free trial to TradeZella. Like I said, this has not happened before. So if you're a listener who has not signed up to TradeZella already, we've been running promos with them before. I can save you 20% on your yearly membership, and that still exists. But now they've opened the door to this free trial to suck everybody in. I think every trader, no matter what strategy you're using, should be tracking their trades in detail and studying their wins and their losses in order to find where to make improvements. We use TradeZella and their mentor mode in every single coaching call that we do with our mentorship students. So if you are not using TradeZella, click the link below, maybe a tab flying in over my head, grab the 5-day free trial. You will not be sorry. And if you want to sign up after that trial, use the code ASFX20 to save 20% on your yearly membership, or use ASFX10 to save 10% on your monthly membership. Either way, we're giving you a free trial and we're trying to save you money. It is a must-have for traders of any strategy. Now, thank you to TradeZella, and let's get back to the show.
Yeah, I mean, it's a difficult one to pinpoint because my kind of thesis toward trading, I'm not a discretionary trader.
No.
So I'm not looking at the way things are moving and making judgments based on analysis, if you like. I have a statistical model that has been built over quite a large sample of data that I just apply to the markets, regardless of what things look like. And the upside to that is it doesn't require, your market read and all the rest of it, pinpointing moves. It doesn't require any of that. All it rests on is if you apply this statistical model day in, day out, year in, year out, over time, it makes money. And it does make money over time. But I see a down year or a down period in a mechanical system as a good thing because it tells me the system isn't curve fitted. It tells me that the system is likely to work long term. When I see something that just has a straight line up, you go and test 10 years and it's just a straight line up. It's never taken a drawdown. To me, I'm like, that looks curve fitted to me. That looks like a system that has been built to produce profit within a niche in the markets.
Right.
And the slightest thing changes, it just
Whole thing's out the window. Yep.
Yeah. So ultimately, pinpointing the why, there's a lot of macro factors, but it's difficult to pinpoint. But what I will say is, in election years, we tend to get 10 months of almost nothing and, just waiting on that election result. So we're only really a month into seeing that election result happen. And we're probably still another month, we are still another month away from seeing that materialize in the inauguration. So,
hard to pinpoint. Yeah, it's difficult for sure. Do you think that it has anything to do with the assets? Like a lot of your trading is Forex and commodities. Do you think that those, has it made you interested in maybe branching into US markets? So if you ever thought about getting a futures thing going, because I know you see it all over the internet. So I'm waiting for you. I'm waiting for myself. I'm going to see Sam KB passes a top step challenge or something like that.
Yeah. I mean, I used to trade futures. I used to trade European, government bonds, German government bonds, that type of things, some European equities, the DAX, the Euro stocks, etc. And when I was trading futures, my main attraction to futures was the level of the data. Having access to the DOM, having access to the footprint, having access to volume profiles, all the rest of it.
Having a centralized market in general so you can see everything. Yeah, absolutely.
Yeah. But, I was trading that I wasn't trading it on time frame charts. I was looking at it on tick charts, like 5,000 tick charts.
Yep.
And it was really swallowing up a lot of my life. I'd be in for the Eurex market open, which would be like 7 a.m. here in the UK.
Yep.
And I'd be in until the US markets closed. I moved away from futures. I probably wouldn't go back. However, what I have been looking at is incorporating some equities into my current strategy and approach, maybe trading the DAX, maybe trading the SPOs, something like that, obviously on CFDs, not on futures. But Yeah, I mean, definitely branching out is something that I've been looking at just in these past few weeks, even.
Well, because think about like macro. If
Yeah,
Trump now does what he says he's going to do, less regulation, tariffs, and the US market responds well to that, it could be a great 4 years for assets, for anything risk on, crypto, especially, right? Bitcoin would do well in that environment. You'd think as
yeah.
US equities would do very well. With that, would you, based on everything you know, would you just go with FTMO to trade equities? Would you go with a CFD prop firm that gives you an opportunity to trade equities, or would you go at it with personal capital?
Yeah, I mean, I think prop firms are a bit of a no-brainer, in all honesty,
Yeah,
because it's free money and there's very limited downside.
of course.
But of course, you do have drawdown restrictions, all the rest of it. I think prop firms are great. I probably would want to do that on prop firms, but I'd also be looking to do it, with my own cash. Something I'm moving into in 2025 is spread betting rather than trading CFDs.
I've heard about
Um,
that. What is that exactly?
so spread betting versus CFD, spread betting in the UK is tax free.
Right.
Now you're trading pretty much the same thing. You're
Okay.
trading markets, but your orders aren't going into the markets. You're betting on price move. So rather than like how a traditional brokerage would work, where you have orders going through, if it's like an ECN or an STP or something like that, and your orders are being, put into a liquidity provider, that's not happening in spread bet. Your orders
Interesting.
are going to a broker, which is almost like a betting house, and they're logging your bet, if you like.
It sounds
Now,
like sim trading with the prop firms, kind of, right? Like a simulated market environment. You're trading the same
yeah,
price, but the orders are never
yeah,
going to the real market. That's interesting.
yeah.
And you're saying that's tax advantaged in the UK. I have heard that before. That's amazing.
So it's completely tax free, because it's considered as a betting income rather than you
Capital
know
gains.
profiting off of financial instruments. Now,
Mm,
the reason I never got into this earlier is because here in the UK, and I'm sure it's the same in the US, if you don't have taxable income, you can't rent a home, you can't buy a car, all the rest of it. You need taxable income. And
of course.
so for the majority of my trading career, I've always traded in such a way that whatever vehicle I'm using, I have taxable income, whether that's, capital gains, whether it's income tax, prop firms, all the rest of it, something that my accountant can put together at the end of the year.
And
And
say,
I have
hey, this guy can go buy a house or go buy whatever he's got standing. Yeah, the struggles, bro. I mean, everybody here in America struggles with that a lot because like I just bought our first home last year in April, and like getting a home as an entrepreneur, we thankfully have our business set up correctly where we take a salary. My wife and I pay ourselves a salary from a holding company that owns our LLC. But like if you don't get that set up correctly, if you don't start paying yourself that salary, you do need
yeah,
to then think about how are you going to make the IRS or whatever the tax agency is for the people listening?
yeah,
How are you going to make them see that you have income? Because a lot of the time they will look at certain things like the CFD betting. They will look at that
yeah,
in America in certain ways that won't be advantage to you to getting a mortgage or anything like that.
yeah,
So I think a lot of people are dealing with that. It's very common.
yeah, 100%. But now I get to kind of stage in my life where I'm a bit more established. I've got the record of income over the years.
Right.
I've got all of that there. And I'm in a position where I'm not looking to make any big purchases, in the near future. So if I can go and trade and spread bet and over the next year pay no tax, it's just kind of a no-brainer. The other
No
thing
brainer.
that you don't get with spread betting is commissions. Now,
Interesting.
commissions are something that are massively, massively overlooked by the majority of traders. I don't know how many times I've seen a system that makes 150R over 6 years, over maybe, I don't know, 500 trades or something like that. And by the time you factor in commissions, you've slashed it in half. By the time you factor in spread, you've taken off another maybe 10%, something like that. And all of a sudden you have a system with a profit factor of 1.8, now it's a
Right.
profit factor of 1.1, or
Right.
even negative.
Worse. Right.
So what I found is a spread bet broker, still to have negotiations with them, but no commissions and pretty decent spreads. I can probably get those spreads reduced again, if, through some negotiations with the amount of capital we're going to be dealing with. That is directly adding to your bottom line.
Huge, dude. Okay, so that's really interesting. Spread betting. I definitely would definitely need to circle back on that on our next podcast. See how that's going. What are you doing for like with your forex and commodity trading? I know you're cooking something. What's your trade of the year for 2025? What asset are you looking at most?
Well, something I don't like to do. In fact, maybe that's not true. I was going to say something I don't like to do is give like price predictions or big crazy predictions. I shouldn't do. In all honesty, look, I think anything priced in dollars is going to have a good year, because if Trump does what he done last time he was in, he's going to want a weaker dollar. When I say weaker, I'm not talking about the DXY fall to like 50, but the DXY sitting at something like 108, 107. I would not be surprised to see that come down below 100. Now, in terms of timeframes for that, I don't know. I'll be honest, I don't know.
Sure.
But what that's going to result is it's going to result in a lot of other markets, equities and stuff like that doing well. Anything pricing dollar down, everything else up pretty much.
Yeah.
So look, I think risk assets are going to have a good year in 2025. I think especially crypto. I think crypto is going to have a really good year next year. But you name the risk asset, all your blue chips, all of your tech stocks. I think 2025 is going to be a good year.
What about commodities? Because if he drills for oil, my trade of the year that I'm not going to trade, but I've been telling everybody is oil drops. I think if he does drill, U.S. oil goes down. I don't know about gold and silver. I know those are both at pretty good, recent highs over the last couple of years too. I think gold's even at near all-time highs. It broke for all-time highs this past year. So I don't know about gold and silver. You got any input on those two? But maybe what do you think of my oil idea?
Look, I do think commodities are going to cool off a bit.
Okay.
I think it has been that kind of obvious trade. Look, when Trump won the election, we saw gold for weeks just selling off. And I think it is the natural thing that happens, doesn't it? Risk assets up, some of these safe havens start to go down.
They also had inflation talk saying inflation was slowing down. Inflation up, commodities up, but as inflation comes down, commodities will pull back too, usually.
Yeah. So I think the kind of obvious broad trade is commodities down, risk up. But it wouldn't be the first time the markets does exactly the opposite to what everybody's thinking.
Of course.
I mean, we've seen some crazy things happen, some crazy relationships occurring between US 10-year government bonds and commodities and risk assets and all the rest of it.
Absolutely.
So there is some stuff, out there that looks a little bit on the concerning side, but we really need to wait for Q1 for the dust to settle after Q1.
Correct.
Trump needs to get in first, and we need to see what he does with those first few months.
Absolutely.
Then I think in terms of the macro picture, in terms of some of these longer term plays for 2025, we're going to have a much clearer picture. Everything right now is speculation based on Trump's policies, based
what he's
on
saying, right? It's not based on anything that's signed yet. I agree. We're going to see, does he come in and drop the hammer, do executive orders, get all the people in he wanted, or does he have a hard time doing that and it's a whole thing? Yeah, absolutely. Yeah. So now, I was going to say, going into the new year, do you see an opportunity in any other market other than crypto that you would tell some of the listeners to pay attention to? You gave a good idea of where you think the dollar may go, where you think commodities may go, but is there anything you're specifically focused on? Maybe like USD JPY because of something going on with the Bank of Japan. That's been a big talking point. Any specific play that you like?
I'm going to go really far, left of field here.
Take us.
I think the Ruble will be one to watch.
Interesting.
Now, I currently don't have any way to trade that without ridiculous spreads and
ridiculous.
Fees.
Right.
It's something I'm gonna be looking at. But again, we need to see what the impact of Trump coming in has on this Russia-Ukraine conflict. Is Trump going to be? Is there going to be some sort of political moves that favor Russia? It might not look good on paper. It might not sound good for the propaganda and all the rest of it. But realistically, do we see something like that? I don't think it's too far out of the realm of possibility to just overlook it entirely. I think Trump has really put, has nailed his colours to the mast and saying that he's going to get this war ended and all the rest of it, that he's going to sort things out.
And
I
you
think
think
there's
if
going
he ends it, that's good for Russia because they'll stop dying. Russia will take the territory that they want. He'll draw a new line, and then that'll bring back the Russian stock market. That's basically what you're thinking. I could
yeah,
definitely see it. Because think about how quickly the Russian stock market tanked in 2022 when the invasion started. Everybody in the West was like, Russia's done, Russia's done, Russia's done, stock
yeah,
market's going to zero. Yeah, but now like that sets up opportunity. I mean, didn't we see a similar thing with the Turkish lira over the last 5, 10 years? Like, look at the Turkish lira to the dollar. That's been an incredible trade, right? So
yeah,
I think there is, but again, another asset there that you got to know the right people or know the right broker to get the right spreads and not get the right, get screwed on the commissions trading something like that. But you're the guy that's going to
yeah.
know anybody. If it's going to be somebody saying, it's going to be you, you're going to have somebody you can call and say, yo, I'm going to throw 50 grand into a broker. I want to start trading the ruble. It's like Michael Burry in that scene from The Big Short where they're like, we don't have an asset that you can place that trade on. He's like, yeah, I know. I want you to make it for me. That's Sam.
Yeah.
That's you.
Yeah, I
What?
mean, look, whenever it comes to peace deals and all the rest of it, both sides have to compromise on something.
100%.
And I think from Russia's side, it's going to be we want X amount, and from Ukraine's side, it's going to be we want you to have none of it. And
Right.
there's going to be some kind of middle ground that, in all honesty, I can only see looking good for Russia.
Absolutely.
Again, I don't have a crystal ball. I'm not predicting the future here, but it's just one of those common sense things. And the thing I like about it is it's a very politically incorrect trade because it's the
So
world.
You're going to get
It's
us
the
canceled for talking about it.
yeah, yeah. Look, it's the Western world versus Russia at the minute, and long Russia is not a popular bet. In fact, that is what makes it even more compelling, is because people are so emotionally biased against this that they don't want it to work,
yes.
which is probably what means it will work. So yeah, look, it's something to look at. People are going to be like, moral, ethical questions and all the rest of it. You pull up any chart on TradingView, you name any currency to me, I can dig up dirt on that country. I can tell you all the terrible things they're doing, the humanitarian crises, whatever. Our job is not to love the assets we trade. Our job is not to have an emotional attachment to them. Our job is not to trade the countries that are just neutral in everything and great at everything. Our job is to see opportunity and to capitalize upon it. Ultimately, that's the bottom line.
Yep. Yep. Absolutely. Do you think that there's an opportunity for new traders that are struggling to see as much success with prop firms in 2025 as they saw in 2024? Because 2024 was the year of the comeback. MT4 got shut down in America. Everybody in America got kicked off CFD prop firms. So we're talking about markets that create opportunity. Let's talk about industry that creates opportunity for a second. You recently, or last time we spoke, we were talking about how you were passing challenges and how that was going really well for people. Are you guys still doing that? And do you still see that as an opportunity for 2025? Like, do you think that this is the best way to get into trading still?
No. Do I think that there's going to be a lot of opportunity with prop firms in 2025? Of course. Do I think 2024 was a shadow of 2023? Absolutely. I mean, 2023, people were going nuts with prop firms. We were seeing some crazy stuff. Um, I think of like Kyle Jacap, I think that's his name.
Mm-hmm.
Like $1 million in payouts, absolutely eye-watering.
Smashed it.
I'm
Yes.
seeing some of those other types of guys, several hundreds of thousands in payouts. A lot of it's kind of quieting down in 2024. I know a lot of my guys, and again, this is the kind of advantage to the way we mentor. A lot of my guys, even though it's been lackluster for my systems this year, we've had guys doing like 35K in prop firm payouts this month alone, singular guys.
Mm.
So is there going to be opportunity in 2025? Of course there is. Are things going to tighten up again? I think so. We saw prop firms in this kind of race to the bottom,
Yeah.
pulling back rules, pulling back restrictions, pulling back time limits. I remember that pivotal moment at the financial magnates in London where I spoke alongside some of these prop firm CEOs, and I raised a question that kind of left everyone speechless, and that was I was having a bit of a back and forth with the CEO of a big name prop firm, and he said, we want our traders we want to see good performance out of our traders before we back them. And our priority is seeing good performance, and our priority is seeing good trading behavior. And I just popped the question back to him, then why do you only give them 30 days to prove it? Because if you want a trader to make 10% in 30 days, you're actually directly encouraging poor trading behavior. And everyone just kind of went silent and was like, yeah, good point. And then 2 months later, all these big prop firms started announcing no more time limits. Now,
Sam broke the industry, everybody, just for the record.
Now, okay, good. That's good. But a balance needs to be struck, because into 2024, or 2023 rather, we saw crazy things happening. 8% profit targets, 12% drawdown, all the rest of it. And a lot of those firms just, rose and then crashed. Rose and then crashed. We had SFT and whoever else, all these firms that were like, kind of, this is going to be the next big thing, falling by the wayside. What have we seen happen in recent months? We've seen firms like TopStep and others start adding more rules, start adding more, okay, that account that you paid for that you could hold over weekends, there was a swing trading account, guess what, we've now taken away that. And all these restrictions start coming back in slowly. And I think into 2025, you're maybe going to see some of these bigger firms start to implement some restrictions again as well to make it not as easy.
Well said. Yeah, I forgot that you called that. I forgot that happened about the no time frame thing, but that is so true. So it's interesting because like you would think as industry goes on, competition goes up, rules go down. It gets easier. No, it's actually going in a different direction because now there's looming regulation. There's looming problems that some of these firms have faced. I mean, look at how many rug pulls we've seen, bro. There was a firm that just popped up in October. It's gone by December. Literally, that's the fastest one I've ever seen, 3 months. So it is tricky, but I think the advice that you would probably back with me is like, do your research, everybody. Make sure you get with a firm, doesn't matter who, but just get with a firm that's got a good reputation. Don't go with the newest firm, fly by night, that you don't even know who's representing them. You've got to make sure you're studying the firm, seeing if they're really paying people out. That's the most important thing, right?
Yeah, 100%. That's always going to be the thing. And a lot of these firms, especially the CEOs that I have met and spoken to personally, they have people within these regulatory bodies that they have great relationships with. And so something I would say is people often, when they see a big name firm changing a rule, they assume, oh my goodness, they're just doing this to get more profits or whatever.
Right.
Very, very often, it's conversations behind the scene that you're not party to. Their contact at the regulator is saying, look, something came across my desk this morning. We're starting to hear echoes that there might be regulation coming. There's a very good chance our agency is going to be knocking on your door in the next 18, 24 months, and all your records are going to get pulled, et cetera, et cetera. We would recommend that you start making adjustments in these areas. And so they go, a lot of the time, these firms don't want to change things. They don't want to make things unnecessarily hard not because they do because it's better for the bottom line, but they don't want to because of the social media backlash that they get. But ultimately, 9 times out of 10, they're trying to, when you see firms start to add rules, yes, it sucks for us as traders, but all that does is it makes me bullish on the longevity of the firm. I'm like, they're clearly being, they're clearly adapting, and that's what's necessary. It's not great for us, but it's necessary.
I love that. What would be something that you would say? Let's go to the newer guys again. And I don't want to run too long because I know you got a dinner to go to. But when we think about the newer trader that's listening, it's very overwhelming. So as much as we go into advanced stuff and you always do, I want to just go even to the dumb it down stuff for the new guy. Is there a possibility from your perspective? And I know you've seen this with some people, but like, is it possible for a new trader to become profitable in year one? Because that question has come across my desk 30 times this last week. People want to make money year one. How to make consistent profits year one. So I want your take on the consistent profitability. What is that to you? Is it real? Like, how do you view that and coach people on that?
Okay. So a lot of people, when they hear consistent profitability, or when someone says consistent profitability, what they hear is monthly cash flow positivity.
Yeah.
So to kind of break that down, a lot of people, when what they mean by consistent profitability is, I'm going to make money every month. Cash flow positivity on a frequent basis and consistent profitability are two different things. Consistent profitability doesn't carry with it a time frame implication. Someone can be consistently profitable over 5 years, and only 2.5 of those years they've made money, spread out over the 5 years. That's a consistently profitable trader. They started in year one. By the end of year 5, they're up, maybe a couple 100%. They've had good years, they've had bad years, they've had positive quarters, negative quarters. That's consistent profitability. Cash flow positivity is January I made money, February I made money, March I made money. Is that possible? I don't think that's possible long term for anyone to make money every single month. I don't even think it's possible long term to make money every single quarter. Once we understand that consistent profitability is making money, over a period of time, yes, it's possible for someone to achieve that within year one, or at least be well on their way to doing it. And the caveat I'm going to add, if they're trading something that's mechanical and rules-based. Something that's mechanical and rules-based is you do X, Y, and Z, and it produces, A, B, C. That you can teach to a child, and they could trade it. Something that's discretionary, that's market read-based, very technically advanced, no, that's going to take time to develop that skill. And I'll be the first to say, I think discretionary trading is more profitable than mechanical trading. Absolutely. But there are less people profitable in discretionary trading than there are in mechanical, because mechanical is following rules. So yes, it's possible in year one, but I wouldn't be trying to pinpoint making money every single month. So many people, they hit a couple of months drawdown and they abandon what they're doing and they jump ship. And all that happens is they just hop onto, if you imagine, if you were to do a simulation of 50 equity curve based on my KPIs, you might find that 2 or 3 of them are negative for, a 6-month period. So if you're in one of those and you're in at month 3, you jump ship, you have a 1 in 25 chance of, when you switch strategy, of landing on another equity curve that's also in a break even or a drawdown period. And so many people, they just repeat the cycle. They hop, and they just continually land in a strategy during a break even or a drawdown period. It's the way that the probability.
That was Sam, great answer. And I think not only are they struggling in that sense with the systematic, because they hop into maybe from one negative equity curve into another, but I think there's then a layer inside that with people they'll say, Sam, I'm committed to these rules. These are the rules I'm following. But then on a Friday, they want to trade and then they do something stupid that is the outlier of the system. And then that data is in the system's data and it makes everything look screwed up. So it's one thing to then commit to the system. It's a different thing to execute it and not get pulled off the path, which is very difficult. But I think that is the difference between guys like you and the rest. The guys that stay on the path, even when they don't want to, they take the trade, even though they don't really love it, but it fits the system and they know they need to play out the data. Those guys that can let that logical brain, what's that, your right-sided brain or left-sided brain, whatever, that side wins. Those guys, I think, end up seeing the year-over-year consistency, whereas the other people may see short-term consistency, but it is never long-lived, right?
Yeah, I mean, that's bang on. And there's a couple of factors at play here. I call this knowing self and feeling self. We have, for every decision we make in life, big decision, trading decision, whatever it may be, we have the things that we know and the things that we feel. Our feelings versus facts, right?
Yeah. Yeah.
And what we need to be able to do as traders is we need to be able to segregate feelings, understand what they are, not suppress them or ignore them. People often talk about, oh yeah, just ignore your feelings. Not a healthy way to be profitable in trading. We need to recognize what our feelings are But we need to be able to compartmentalize them and say, okay, that long that I want to take right now is coming from feelings rather than facts. What are the facts? My system doesn't have a viable trade setup. What are the facts? I should only be risking X. What are the feelings? I want to double my risk to make back, etc., etc. We need to be able to do that segregation. The other thing, a lot of people struggle to stay on their plan because everything is riding on their trading success. I always recommend having multiple streams of income. It is the absolute best way. You can achieve cash flow positivity month on month if you have a diversified income
But wait,
stream.
Sam, but you're a trader. You're supposed to make all your money from trading. What do you mean you have other streams of income? Yesterday, bro, somebody was doing this to me on Twitter. Is trading your only stream of income? That question shows you don't even understand entrepreneurship. You don't even know, like you have studied zero about wealth. What wealthy person, not rich. And most rich people have multiple streams, not even that. But like to be wealthy, financially independent, who has one stream of income?
Yeah.
No.
Yeah, no one. If you have a couple of streams of income, even two or three, it means not everything's riding on trading. You will trade better and make more money if you have multiple streams of income rather than if everything's riding on it. And so this is, it's very, very basic foundational stuff. Broaden your horizons. Many of my most successful students, I think of one Spanish chap called Marty. He's a teacher in Spain, probably on 27 to 30,000 euros a year as a teacher. He still teaches, but he's also having days where he's withdrawing 27K from FTMO.
Love
now,
it.
Some people look at that and they're like, they just
why would you still be a teacher? But you don't understand. He's bought in on it. He gets it. Like Marty fucking gets it. Yeah.
But he also loves his job. Does he need to teach? No, but he likes his job. And so I have a lot of guys who are like, they work on oil rigs or they're studying to be a doctor or they're studying something crazy at university whilst trading our approach. And what it means is not all their eggs are in one basket. They have a career that they love and enjoy, businesses that they're running, and that's what they're focusing on most of the time. And trading is that thing in the background that they do for a couple of hours a day and that makes them an income alongside what they're doing. Many years, that income's equivalent to or even double what they're making from their day job. But if you find a career that you love, it doesn't have to be, am I going to trade or am I going to follow this career? You can find a way to do both.
Absolutely.
And now your risk is diversified. You lose your job or, trading doesn't work out for a year. You have that diversified risk. And that becomes even more important when you move out of mum and dad's house and you've got people dependent upon you. You need that security of multiple streams of income.
Dude, 100%. All right, last question, then I'm letting you go. Biggest lesson from dad life that translates into trading for you? Think about it too. Think anything that stands out that parallels a lesson that your baby girl has taught you that impacts your trading.
Dealing with unpredictability, dealing with randomness, because anyone who's had a kid knows that you have to, the weight of responsibility that's on you, I mean, it's crazy, right? You witness the labor. I witnessed the labor. It was absolutely insane. It was the most surreal thing I've witnessed in my entire life. But I mean, it was wonderful, but it's surreal. And then you have like this little human that looks like an alien, like this big, and is just so like small and weak that you could just crush it. It's just so fragile and vulnerable. And then you get home from the hospital and nobody is coming to save you. It's you and your significant other and the child. And it's like, I guess this is my responsibility now. And you have the pressure of trying to keep this thing alive, feed it, clothe it, care for it, all the rest of it. And every day looks different. And so, I mean, being very level-headed because of what we do for work, I felt I dealt with it pretty well those first few months. Lack of sleep and all the rest of it. Again, there being the trader that I am, I've always been someone who has his finger on the pulse. Sometimes I'll be up at 3 a.m. just looking at certain things because I've had an idea or whatever. So in all honesty, if you're a trader, I think having a kid's not going to be a crazy change of life. You're still going to
No.
have crazy sociable hours. You're still going to be dealing with a lot of pressure and stress, but you're going to have to adapt to things on the ground. And yeah, I mean, if you've ever had serious risk in the markets at any one time, you know what it's like to deal with a situation where the stakes are super high, and having a baby is just
Don't
every
get
single
much
day.
higher. Yeah.
The
Means
stakes,
that
the
kid
stakes
don't
are
eat, it's on
super
you.
high.
Yeah.
Yeah, you have human life in your hands.
But isn't that amazing? Because I mean, I know we've talked in previous episodes about like your religious beliefs and stuff, but it's like, isn't that what we're here to do, bro? To serve? That's what the Bible
Yep,
says, really, right? So
yep.
as a man, like, what is more fulfilling than to serve your wife and to serve for your
Oh
child? Nothing.
yeah,
There's nothing better than
nothing,
that. No.
nothing comes close. And my perspective on life has changed totally since having a kid. Like all of a sudden, it's no longer about you and your wife. It's now about this other human, and it is the most refreshing change of pace ever because all of a sudden, like what clothes you put on, it's not the end of the world. Like you when
You
you're a
got throw
young
up on you, doesn't matter. You smell, doesn't
yeah
matter. Doesn't
like
matter. As long as the kid is good, that's all that matters.
yeah, like when I'm a younger man, perhaps you leave the house and you put on the wrong shoes or something like that, and you're like, or you've not got the right jacket or shirt on or whatever, and it's like
That
a
doesn't
big
even come into the mind now.
nope.
Do I have pants on today? All right, good. Then we're good. We can leave. And then,
That's
to the
it.
unpredictability, it's like you just run out for Chipotle back in the day. Now it's a whole adventure. And the baby might
Oh
shit or throw
yeah,
up in the car on the way there. And it's a
yeah,
whole fucking thing. When we had our son, we had it at a birthing center. We went in there that morning at 8 in the morning with contractions. We left at 9 o'clock that night because they don't do the regular stuff that a hospital does. We left it the same
yeah,
day with a baby, bro. So imagine
yeah,
that. We leave that morning, no baby in the apartment. You come home and you have a baby. It's like the
yeah,
most pressure, right? The most uh, life changing in a second kind of an event. But then, like you said, instantly you start to embrace that pressure. Instantly you start to embrace what's important versus what's not important. My shoes don't fucking matter. My kid having
yeah,
clothes on his back. I want my son to be more styling than me. I'll wear the old dad New Balances. I'll look funny. As long as my son's got the Nike sweatsuit and he looks good, that's all I care
yeah.
about. You know what I'm saying?
That
It's just different.
that's it. That's it. Like you really become a man, and it sounds strange to say, but you become what you were designed to be. You become this protector, this provider, all the rest of it. And the responsibilities is it's heavy. It's heavy at times when you realize, okay, the future of this family is kind of, I have been given this responsibility to manage, but at the same time, it is empowering.
That's
People
the
will
way you
find,
want it to be. If not you, who else? Who else is going to write the story? That's the man's job.
yeah, yeah, we live in a world where empowerment is, selling your body online or, having several 100,000 followers or whatever. We could go into all that crazy stuff. But there's nothing more empowering or fulfilling than having kids, getting married, all the rest of it. And so from when Neve and I were like 17 years old, that's all we ever wanted to do was to, have a family.
Yep.
Got married at 22.
Imagine that, bro.
Yeah.
In today's day and age, I feel like that's kind of unconventional. Now everybody's like, "Oh, we're gonna do OnlyFans. We're gonna go move to Bali and not have kids." Have you seen that thing? It's dual income, no kids. It's like a trending thing. God, that is sad. Oh, I'm 46. I have no kids. I'm drinking on Friday night still. Like, still, you're doing that. Like, you
I
didn't get tired of it. That's crazy.
I look at this stuff and I'm like, do you not realize? Now, okay, so I had the benefit before I was a Christian. So I only became Christian like 4 years ago. Well, five, maybe 4 or 5. Before I was Christian, I had the benefit of getting access to a lot of money pretty quickly because my trading career and stuff like that was kicking off. And, I got the car and had the social life and all the rest of it. And after a couple of years of doing that, I realized how empty it was. The majority of people, and this isn't to be big-headed or whatever, but as a guy in my late teens, early 20s, I was in the top percentile of income and all the rest of it, and so I was able to live the life that most people are grinding most of their life to get to. And so what happens is many people through their 20s, they're a broke student, all the rest of it. They eventually get the job, they start making a bit of money, but they're not wealthy yet. And they're like, if I keep on this career trajectory in 10 years, I'll be wealthy. And they'll arrive at 40 years old, what I arrived at 20, through the markets, through this amazing industry that we're part of. And it's only then they get to, 40, they get a couple of years into that, and maybe 42, and they start to realize, oh my goodness, this is fulfilling. I need a family. And guess what? They're too old. They're past birthing age, all the rest of it.
Yep.
And so people are chasing that thing, and I'm very blessed for this. And, I'm sure in many senses you're in a similar situation where you had the traditional values, you had the core teachings, philosophical, religious teachings. For me, it's Christianity. So I knew that all of that, you could have all the money in all the world, it's not going to bring you fulfillment. You're constantly going to be chasing that. I knew that true fulfillment was in a solid relationship with your wife, family, and a relationship with God, being the utmost thing. Once you have that, look, if I get broke in 5 years' time, I'm still going to have that fulfillment. Yeah, you're going to have added pressures, but these are things that can never be taken away from you. These relationships are eternal.
And they want to distract us. That's what you're saying. It's a distraction. Social media distracts you from the family unit, the things that are important, money, materialism. It does. It's a distraction from the things that'll be there when all that shit fades. Yeah, no, it's like now we sound like conspiracy theorists. Oh, we're trying to break up the family unit. Well, you are. Like, that's why is everyone tranny and gay and don't have kids and all this shit? They want to break up the thing that is the reason we've evolved, which is the family unit, the relationship with religion, the relationship with your significant other and your family. That's it.
I think about it, Austin, 10, 15 years ago, how the world has changed just in that short period of time. And on the whole, people are, I see 18, 19-year-olds now, and I honestly feel like you are a 12-year-old. Everyone's becoming less mature. And again, listen, to hate on anybody, you see 30, 40-year-old guys walking around just looking like kids, the baggy jeans halfway down their legs and all the rest of it, skateboarding. And again, this is not to hate on anybody, but I feel like the comfortable socioeconomic environment we live in,
everybody's soft.
People don't need to mature and think about these things. And so what happens is they just become an overdeveloped teenager, constantly living for themselves. Whereas you go to third world countries, you go to places like Nepal or wherever, where things are a bit harder. At 11 years old, you're the man of the house.
Yeah. Yeah. It's not a joke. It's the way it used to be for you and me, right? But we know, good times make soft men. That's just what we're dealing with right now. But unfortunately for the soft men, times will change. The soft will become squashed, and then strong men will rise again as things change, So hopefully we're headed into a good turning, but unfortunately it probably gets worse before it gets better.
I think that's a very optimistic outlook. I know what I think happens is, I think good times have created soft men, and those soft men are going to be replaced by technology. Amazon currently employs more robots.
Oh, good, dude.
I think, and now this is really far left field conspiracy theorist, but I think we get to a stage where the majority of these big companies that are supplying a lot of what we use and need in our day-to-day life is being operated by AI, is being operated by robots, all the rest of it. These companies are wildly profitable. Governments are wildly profitable because they're not relying on human labor. And then they give you a paycheck to stay home every month. They own your house. They own all your belongings. You own nothing and be happy.
I see that. I'm in that boat with you too, 100%. That's what AI is going to do.
Yeah. And then what happens is birth rates continue to absolutely plummet.
Yep.
And, then we have some kind of technological apocalypse where you have only left people with traditional values that, grow their own food, and what's his name in The Big Short? The
Brad Pitt guy, right? Where he's out he's know about the seeds and stuff. Yeah, I forget the character's name, but I know who you're talking about. He's sitting there he executes that dream. Yeah, exactly. No, bro, you're so right. So right. But listen, Sam, let's pause because I don't want you to be late, bro. I appreciate the hour so much. I know the listeners do. So we're going to have to do another one again soon. Maybe I'll make it out to Scotland sometime soon. My wife would probably love it because she loves the Pacific Northwest with the trees and the rain and she loves all that. And great, send you to Ireland, send you to Scotland. It's basically what they have there, So maybe we'll do one in person one day. That'll be a good goal for us. But I appreciate you so much. Where do you want me to send everybody? Instagram, Twitter, where do you want to send?
So very quickly on the whole Scotland talk, there is
Yeah,
a really, really good place like hotel near where I live. They have a cigar terrace and the drinks and stuff there are great. So I think it would make a great podcast setting. But with regards to where to send people, YouTube, Sam KB, Sam KB on Twitter as well.
perfect.
I post a lot on Twitter, politics, religion, markets. If you can deal with rants every so often, go follow me there. I certainly don't shy away from getting into Twitter battles with absolutely nonsensical tweets.
Same, bro. That's why we get along, buddy. Same. I take it any day. No, I love it. I think everybody knows you through Twitter too. That's why I asked, because I want to make sure we send them somewhere like to the YouTube as well, where they'll get more educational content from you too. So I think that'll be great. We'll put both.
I'm going to be working on a lot more YouTube in
Good.
2025.
Good. Cool. Thank you, bro. Appreciate you so much, buddy. Enjoy Christmas. Give your family my best, as always. Appreciate you. Listeners, thank you guys for staying all the way through. Merry Christmas to all of you guys, too. It's probably after Christmas. Happy New Year. Whatever it is. Happy holidays. Make sure you guys are subscribed, and we'll see you in the next episode.